Our next guest says markets are underestimating the real threat inflation can pose. Nancy Davis is the founder and chief investment officer of Quadratic Capital, manages the firm's interest rate volatility ETF, which is also an inflation hedge. She joins us now. Nancy, great to have you with us.
Thanks for having me.
You actually say that the markets are underestimating the amount of inflation out there because CPI just is not a good measure. We've known that CPI is not a very good measure. So I'm wondering how much inflation you think we really have on our hands right now.
Well, I think we can all feel it. I mean, any American consumer right now, have you tried to buy a bike? Have you tried to buy a webcam? Have you tried to buy a sofa, a computer? Everything uses chips, and we're having a global chip shortage. So I definitely think it's a tough time where the CPI index isn't capturing necessarily the real inflation that we feel on a day-to-day basis.
But this is just transitory, Nancy. It's going to pass in a few months. This doesn't, and you laughed immediately. So does that mean that you think that notion of transitory is bunk when it comes to consumers actually feeling the pinch? It doesn't matter what Jay Powell says. It matters what is actually happening right now in the economy.
Well, I think the Fed is prioritizing the unemployment rate over prices right now. They have a dual mandate. We still have a very, very high unemployment rate. They're trying to get people back to work, back into the economy to stimulate Main Street. And I think the Fed is willing to look past inflation. And I think that's what they've been saying is every central bank around the world has been trying to get inflation. I think if they get inflation, they'll actually see it as a win. The thing that they're really focused on is that unemployment number, though.
Hey, Nancy, it's Brian Kelly. So I'm curious, that unemployment number seems to be a bit skewed, too, though, because we hear anecdotally it's very hard to find help, yet unemployment went up. So there's something that the Fed isn't capturing, or in their numbers it's not capturing. I'm curious, do you think the Fed is making a policy error as we speak?
I don't think they're making a policy error. I think they're trying to do the best they can. But no, everybody's human. They don't have perfect information. We have two major indices, and I think indices is a key point to emphasize. It's like if your viewers bought the Dow Jones and said, aha, I have equities. The Dow Jones is one index. The CPI is one index. It's a consumer price index. And the PCE, which also the Fed uses, is another index. It's very hard to measure something like inflation. And I think the rates market is a very pure and simple way of actually seeing where investors will lend money in the future. And that's largely a result of investors' expectations for inflation in the future.
Based on how your ETF is being traded and in terms of the volume, in terms of how it's being traded, Nancy, I'm wondering if you can sort of glean how investors are positioning themselves for inflation, if they do think it's just, a few months kind of thing, a few quarters kind of thing, et cetera.
I think most of our investors who use IVOL are not making a bet about whether inflation is going to happen or not. I think most of them, there are two ways that, people can lose their life savings. A is having portfolios that are correlated with one another, where everything goes down, stocks, bonds, everything together. And the other is a loss of purchasing power from inflation. So I think most of our investors in IVOL are using it as an asset allocation trade to say, look, we want to have inflation in our portfolio, but we want another index beyond CPI.
Right. Nancy, great to have you with us. Thank you.
Thank you.
Nancy Davis of Quadratic. Dan Nathan, what do you think?
I think, Mel, we're going to look back on 2021 and we're going to call it the transitory tantrum. Tantrum from 2013 when rates got to about 3% and equities freaked out for a little bit. I think the amount of time that economists and strategists and pundits like us are spending on this inflation thing. We know inflation's been here. We know it gets measured differently. We know that people were yelling about inflation was coming back from 2008-9 when we started QE and ZIRP and all that sort of stuff. So to me, I just don't know what the big deal is. We're going to have these periods where there's big shortages. We just had we just had the biggest disconnect in the global economy in 100 years. Yeah, there's shortages and there's certain surpluses in other places and everything. I think we're going to look back and be like, oh, well, that was kind of funny. They already told us they were going to let inflation run a little hot. Right. They started telling us that last year. So to me, I don't know. I think we're making a big to-do about nothing.
And I think in retrospect, maybe that will be the case when we look back in a year or two. But we're in the fall, Tim. I'm curious to get your thoughts. When we're in the fall, when inflation is still here, when consumers are paying, when price increases go through on things like Pampers and paper towels, unemployment benefits come off, eviction moratoriums come off, what happens then? Because it's all about how this economy claws its way out of this recession that was induced by the pandemic. And maybe it's not the right time for inflation in terms of a smooth economic recovery.
Well, I think Dan is right to say, hey, folks, let's take a deep breath here. And there's imbalances that clearly exist, and they will be eradicated in a free-flowing global economy, which eventually, I believe, we're going to get. I think, though, we can all push back, and I'll just phrase it as, I think I've said it before this way, and others have said this. The Fed is chasing, whether it's 50 bips or 100 basis points of inflation at the risk of a global asset bubble. Look, copper prices are at all-time highs. Lumber prices are at all-time highs. Housing prices are at all-time highs, and in places we never thought they would be. We have created, and we're not even talking about the stock market. So the question is what point are we going to pay the price for this? By the way, how about that payroll number of last Friday? Do you really think that's going to show up? No, the inefficiencies of just the non-farm payroll data series means that I think the numbers we're going to get for May are going to be extraordinary. And that's going to be even scarier for people. I think that first Friday of June, you better be switched on. So I think in the short run, the fact that Fed policy needs to be altered is going to be devastating for equities. Right now, it's not, and I think we could, give or take some spikes, get through this. But at some point this year, they're going to have to make an adjustment.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.